Hi, welcome back to my channel. Thank you everyone who voted on the video they wanted to see next. The one that won was organizing your bathroom under $20 at Dollar Tree. It's taking me a little longer than expected to edit that one. Please bear with me as I'm very new to this process and I want to bring you my best. As soon as it's done, I will post it just as soon as it's finished. Today we're going to talk about how to build credit, why you need good credit, and misconceptions about what is on your credit report. Let's start with why I need a good credit score. Well, number one is to get loans such as a car or home loan. Number two is better interest rates. The better your credit score, the better your rate will be on any type of a loan that you will get. A higher credit score will save you thousands of dollars over your lifetime. This is especially helpful on mortgage loans that have a higher amount that you will pay over many years. Number three is you are less likely to need a cosigner. Anytime you have established credit, you will most likely not need a cosigner on a loan. Number four is better rates on car insurance. A lot of people don't realize this is one, but that is a big one on why we need to keep good credit over our entire lives. So let's talk about how do I start building my credit? There's really two ways to do this: a Sharesecure loan and a secure credit card. First, let's talk about a Sharesecure loan. This type of loan lets you borrow using your savings account balance as collateral. The best way I've found to describe this, it's a loan that has two sets of money. Let's say you need $200 for the loan. You will need that amount available in your savings account. The lender then freezes the amount you request to borrow, and it will be available for withdrawal once you pay off that loan. Then they're going to give you a loan for $200. So you walk out with the same amount you deposited. It allows you to use your own funds so that you won't have to pull your credit. You will pay a monthly payment that will be reported onto credit. Make sure you're never late on this. I would recommend setting up an auto pay. It will do the opposite to your credit if you pay it more than 30 days late. I would recommend looking at a local credit union to do this type of loan. Make sure you do some comparison shopping to get the best deal. Here's what to look for. Number one, what is the minimum I need to deposit into my savings account? Number two is make sure there's not any type of credit check. After all, the reason you're doing this is to build credit. Number three is what's the interest rate? Make sure you get the lowest one available. And number four is do they report to one credit bureau or all three? Really, in a perfect world, all three would be great. Next, let's look at Sharesecure credit cards. The first option we looked at is considered an installment loan. Another type of installment loan would be a car loan. A Sharesecure credit card is revolving credit. So here's some things to consider with this option. Number one, make sure you use the card for small purchases each month. It needs to be active to make sure that you're gaining credit. Number two, don't use more than 30% of the credit limit. Here's an example. Your limit is $200. Then you don't want to spend any more than $60 on that card in a given month. $60 is 30% of $200. Number three, make sure to pay off the card in full each month. Again, I recommend auto pay so you're never late. Number four, make sure the card does not have an annual fee. And number five is the rate doesn't really matter because you're going to be paying off the balance each month. The Sharesecure card I would really recommend is called the Capital One Quicksilver Secured Cash Rewards Card. There's many versions of the Quicksilver card, so I will link the correct one below in the description box. If you've learned anything so far, please click that like button below. It really helps other people get this information, and I would really appreciate it. If you're able to do both a Sharesecure loan and a secure credit card at the same time, that would be the most helpful. You'll be establishing both installment and revolving credit at the same time. If you can only do one, that is better than nothing. Having a minimum of 6 months will get you a score, but I would recommend keeping these loans for about 12 months before you apply for a regular credit card. After you've paid off your Sharesecure loan of your choice, make sure you do apply for a credit card. If not, you will lose that score you had just gained. If you do not have any active credit for 6 months, your credit score disappears. Some people are nervous about having a credit card. However, if you use it properly, you will have a higher credit score than someone who doesn't have credit at all. There's some popular misconceptions about what's on your credit. So what's going to report? My rent, cell phone, utilities? No, these don't show on your credit report unless it's not paid and they can turn into a collection. There is a way to get these items added to your report. It's with something called Experian Boost. If that's something you want to know more about, please let me know in the comments. The last way to help your credit score is to be added as an authorized signer on a credit card. Make sure it's someone that has a high credit score, preferably over 730, that uses their credit with the 30% rule I spoke to you about earlier. Otherwise, it's going to hurt your score. If you have found value in this video, please don't forget to subscribe. Also, if you have any credit questions, please put them in the comments below. I will see you in my next video. Bye, friends.